Welcome back, everyone. This is a brief update on news from the oil market. In a meeting taking place in the previous weekend, oil ministers from Saudi Arabia and other OPEC producers said that they were favoring the extension of the production cuts into the second half of 2019. The Saudis prefer to keep their tight production management and watch inventories dropping gradually, but keep supply in normal levels. Detailed information from the various reports indicates Saudi Arabia's crude exports during the first quarter dropped by less than 1% compared with the same period in 2018, while export earnings fell about 7% compared to the previous year. Do these percentages raise the question of what are the expectations of the OPEC Plus group for oil prices? Also, what could be a satisfying price level for them to reach in order to change the balance of supply to the market? From a maximum profit perspective, the Saudis can achieve much better results, yet they may be thinking of a long-term and steady strategy rather than a short-term winning streak. On the other hand, the Russians still seem to be skeptical whether this is the right way to go with production levels. Russian Energy Minister Alexander Novak implied that they are willing to increase production, yet he added Russia will still comply with any agreed output limit until the end of 2019. On another front, in an interesting report, Morgan Stanley released its expectations for the second half of the year regarding oil price fluctuations and the drivers behind the prices. According to Morgan Stanley, Brent crude prices could be lifted to the $75 to $80 per barrel range in the second half of 2019 due to a significant tightness in the oil market. It based its view on the assumption that the market is expected to be at 1.1 million barrels undersupplied by the third quarter, as at the moment there is a 0.6 million barrels per day deficit for the second quarter. On a separate matter, both the United States and China involvement in an increasingly bitter trade dispute has now moved to the oil market. Some evidence is provided through a statistic performed by the U.S. Energy Information Administration. In the first half of 2018, China imported an average of 377,000 barrels per day of U.S. crude. In the next 6 months, the Chinese imports had dropped to 41,600 barrels per day, a considerably much lower figure. For more in-depth investigation, please refer to our written report, which also includes technical analysis. For more information and trading ideas, make sure you visit our webpage, follow us on Twitter, like us on Facebook, or subscribe to our YouTube channel. This is Angelo Zittis from IronFX wishing you solid trading.